What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol F for Ford Motor Company. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it just the other day as it was breaking out, and I wanted to do a follow-up video on today's session, certainly giving us an inverted hammer from the daily time frame chart, indicating that sellers did step up towards these highs after we rallied off of an open that was lower than the prior day's close, right? So to me, the fact that the buyers really failed on that attempt to go higher. We resisted right at that nice round number 25. Not looking phenomenal in terms of just immediately continuing higher. Now, don't get me wrong. We are still far, far above that breakout point here, 2050. So the chart's not destroyed. I'm not saying that at all. But I do think we're in store for a little bit of either pullback or healthy consolidation. So let's take a closer look at the 30-minute intraday time frame just to see how the moves actually unfolded here. Again, it looked really, really solid with this bull flag. And this was fairly promising out of the gates. But the 100% rollover into the end of the day, back down towards these lows, is starting to become a little bit questionable, right? As of right now in the post market, we're literally sitting right on the level 2360 by 2356. If this starts to go, we know that there's not a whole lot of structure from the rally higher, and we should rotate to the bottom end of that green full-bodied candle on the daily at 2242. When and if we get there, again, there's nothing more than a gap underneath us to support. The next level to watch out for is 2189. You can clearly see that on the daily, correct? So to me, be on the lookout for pullbacks that violate this area here, 2357, 2360. If this general area starts to go, we know that some more selling pressure could ultimately come into the stock. If it's going to happen and we see a deeper pullback here, what you really want to make sure we get is lower volume on the pullback from the daily perspective. If volume dramatically tapers off and then on any sort of uptick starts to come back into the stock, something that looks again like this, then phenomenal. That's exactly the type of volume pattern that you want to see when we're looking for healthy periods of consolidation in overall market turbulence. So that's what I'm thinking about here inside of Ford. You have the downside levels to pay attention to. If it's just going to reverse and hang high and tight up here, then fantastic. We know if we take out the fibs from here, coming on up to the high essentially of this, it's still well above the 61.8. That's fine. In an ideal world, we hold up above the 38.2, but we can't ask for that knowing that structure is technically around the 50% mark. So we'll just deal with what we've got. So for now, again, just to give you a recap, any breakdowns should take us considerably lower into the gap area. Be on the lookout for lower volume if that happens. If we remain here for consolidation, also want to see lower volume, and any sort of upticks that take us up through this resistance around 2460s, start looking for volume to pick up, indicating that, hey, maybe there's going to be a chance we break 25 this time around. That's what I've got for you here inside of Ford. If you enjoyed the video today or learned anything new, let me know inside of the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.